option trading earnings edition. Now, the goal here, as you probably guessed, is to try to set up a trade that wins regardless of direction. So we don't care if the market goes up or down. We want to set up a trade that wins on either side. Now, I'm certainly not the first one to come up with the idea of trading in both directions, but the key with two-way options is that we're able to twist the trade in a way that overcomes the key problems that have historically caused these strategies to fail. Because if you go back and look and try to find ways to trade, strangles, straddles, all those kind of things, they typically fail at a very high percentage. So let me give you the 5 reasons that the dream of both directions never works. The problem number 1 is the market doesn't move a ton in a short amount of time. Now, this is very shocking to those of us who traded through COVID and 2025 and all kinds of other areas where it feels like the market's always going crazy. But in reality, the market is not always going crazy. Today's a good example. It looked like it was moving, but in reality, it went a whole lot of nowhere, and that's actually the norm. The market doesn't tend to move very fast. This chart is showing us that the deviation outside of a couple, like 1 out of every 80 days, the market does nothing. Problem number 2, buying more time, giving the market the time it needs to make moves is very expensive. Let me show you what I mean. If you took a 574 or 573 put today, it would cost you about 81 cents. Okay, if you go take the exact same trade for September 19th, that's only about a month and some change of time. Look at the price. It costs you 30 times the amount of money to buy a strangle just by grabbing a month of time. Anyone see how mind-blowing that is, how expensive it is to buy time when you're trying to give the market room to go in both directions? It's crazy, crazy expensive. But by the way, guys, it gets worse because the problem number 3, the amount of movement you need is absurd. Okay, so if I want to buy this, strangle straddle combination, any version of it, you're going to need, in this case, I'm using the QQQ, you're going to need to move a crazy amount. Look at this. Just to break even, guys, this is not to hit a winner. This is just to break even. I need the Qs to move 4.5% to the downside or 4.1% to the upside. Again, that's not to make money. That's just to break even. And if you guys know, the Qs average what per year? About 10% a year in movement. You need to move 4% in 1 month just to break even. Now, I'm not a math major, but hopefully you guys can recognize that if the Qs average 10% a year, asking it to move 4% in a month is already beyond, way, way, way beyond the expectation. And yet that only gets us to break even. So go ahead and type the word insane in the chat if you recognize that setting up a strangle straddle, trading it for $2,000 for a single contract, and then needing the market to move 4 to 5% just to break even is insane. Well, then give me an insane in the chat because that is totally ridiculous. And by the way, just to keep doubling down, that's only problem number 3. We've got 2 more to get through. Getting out of the box, because remember, you have a box of where you need the market to go. Getting out of the box isn't even enough. Why? Well, because it might come right back into the box. And now you finally stretched out of the expected move, and boom, the market settles back down. And guess what? You're a loser all over again with this combination because it got out of the box, but then it came back into the box. And then problem number 5, just to really hammer it home and make our lives even more miserable, is that the risk to the reward simply doesn't work. Even when you do hit it, you're getting a gain of about 50%, but your average loss is anything that doesn't get outside the range, which is going to be 100% if it expires in between those zones. And the reason your average gain is only 50% is because you have to overcome the loser on the other side just to make it worthwhile. So once again, hashtag insane. It's really, really difficult to trade the dream of both directions, and most methods never even come close because you just stack up too many problems to overcome. So what we're trying to do is we're trying to twist these options. And for those of you, listen, obviously I'm going through this at warp speed. Don't worry. We're going to go through this. I'm going to give you the earnings edition. We're going to take some trades, and then I will play the two-way options broadcast because I think what we've done with two-way options is absolutely incredible. It literally flips all 5 of those problems on their head and gives a whole new way to trade. So I'm very excited for those of you who never have had a chance to trade two-way options with me. It's one of those ones I don't get to talk about a ton, but we'll cover that at the end. But what we're doing is we're changing the required move, we're changing the amount of time, and then we're changing the risk reward all at the same time with one trade structure that's going to give us a better opportunity. So I'm really excited about that. Hopefully you guys will be excited as well to take full advantage of that. Now, instead of needing a 4 to 6% move on a shorter time frame, we can actually trade with about a 1.5% move in either direction and give the market plenty of time to do that. Now, with earnings, we have a chance not to do that typical 1.5. Like I said, I'll show you that move later. What we're going to do is we're going to apply it to the gamble trade without all the disadvantages that I just talked about. Okay, so we always do this with 2 debit spreads in one ticket. A bullish debit spread, usually targeting 1 to 2%. Earnings, baby, we might go a little more than that. Bearish debit spread, 1 to 2% to the downside. You basically combine those together and you create a box around the market where you need it to move. And when you put these together in one ticket, your broker will probably call it a reverse iron condor, or maybe it just even includes the regular iron condor naming, but it's actually the backward legs as usual. You guys don't have to worry about that. All you got to worry about is the trade that I'm going to update. Sorry, I muted myself there. You don't have to worry about the getting all those iron condor, reverse iron condor naming conventions right. You can just worry about copying and pasting the legs that I give you. Now, with each spread, what we're doing, as always, is picking a line in the sand, right? So we're picking a line in the sand above and below the price at the same time, which is really the beauty of trading this way that I don't do in most of my other strategies, obviously, because they're directional, is that we're saying we don't care which way the market goes in earnings. We don't care if it's a beat or a bust. Doesn't matter. We have a line in the sand in both directions. And when you look at the chart, it's going to look something like this, right? So you have a line in the sand up here. The market's either going to have to go up or it's going to have to go down. This is kind of your dead zone in the middle. You don't want the market to do anything or to do nothing. You don't want the market to be boring. You want the market to either move up or move down. So you're going to have a line in the sand up here. If it goes above, your long side's going to win. If it goes down, your short side's going to win. So we're either looking for a move in either direction, above that line or below that line. In practice, might look something like this. This is an example of a real trade we put on. You're buying one call spread up here, then you're buying a put spread down here, and it creates these 2 lines where the market can move in either direction. In this case, you're going to be capped out at the value or the width of one side of the spread. So if you're trading a 613 and a 614, and then a 603, 604, the max value that all 4 of these legs can be worth is $1, right? So that's going to help determine what you can make on this trade. And for a whole bunch of you in this room thinking, Nate, what are you talking about? Lines in the sand, both direction, max value because we did the 603, 604. What are you talking about? Don't worry. We'll go through it. We'll drink out of the fire hydrant for a couple minutes here as we do some live earnings trades. But then if you just hang tight, I'll also share the whole two-way options presentation with you that will add a lot more color. But basically, the goal here is to get the trade to move in one side or the other side. Either way, it's going to give us the max value of that trade, whether it's on top or on the bottom. But just to make it awesome, instead of waiting and predicting either of these outcomes, we're using a good till cancel target, which means, like almost all my strategies, if we ever get a pop in one direction or the other that's worth enough, it's going to close us out early. And it doesn't even matter if it comes back down into this no man's land. We don't care. We're going to get out ahead of time. So are you guys ready to see this in action? And you kind of see, if I just go back real quick here, why this could be good for earnings, right? Because with earnings, we're expecting a pop in one direction or the other direction. So does everyone see why this is kind of a cool strategy to apply to earnings? Because we're setting it up where either direction is going to get us to the finish line. So we ready to do some live trading? Graham, I'll also lean on you to feed some ideas here. But there's one that I had my eye on, which was Circle. And then I saw you sent me RGTI with a big fat order. And did we get Archer as well?
Yes, we did.
So we got
that was the October calls.
Okay.
13 strike calls, but 600 grand there.
Okay, and were the RGTIs this Friday, or were they longer term as well?
Yeah, this Friday.
Okay, well those ones I like then.
$18 strike, $2.4 million.
Okay, that's speaking my language. All right, so let me then stop sharing this, and we'll start sharing Thinkorswim here.
And the funny thing to me is the implied move is about $2, so it's right on the implied market maker move line for we're getting.
Okay. So guys, what we're gonna do, I'm gonna show you a two-way trade. What we're gonna do is we're gonna try to find one. Our little hack here is we're gonna try to get in to one of these trades where we can go in less than the market maker move. So we can trade for maybe half the market maker move and still be able to get a 20-30% ROI. Right. So basically, we don't even care if it under delivers. As long as it moves on one side, we'll make 20 or 30%. You could do a much more extreme version of that where you go like outside the market move. You look for a big beat like we should have done on TTD, where you can make a much bigger bang for your buck. But I'm going to show you kind of the more, I guess you would say, conservative earning style, which is, listen, give me... Sorry. For some reason, whenever my mic cuts out, it does an auto mute thing. I think that's by design. But this way, if you get a move, basically half the market maker in either direction, you can get out. So that's what we're going to do. Let me start with Circle here.
And just FYI, RGTI is tomorrow after the close.
Oh, after the close. Okay, I was thinking it was tomorrow before close. Okay, gotcha. So do we want to wait and trade that one tomorrow in closing Playbook then?
Yeah.
All right, we'll wait for that one.
I mean, the thing moved 3.5% today, so it's probably going to do something similar tomorrow.
Yeah. So Circle, speaking of things that move, Circle's up 2% today. If you guys haven't seen Circle on the chart, it's quite a sight to behold. Here's the entire history of it since IPO. IPO'd at $64, hit $298 about 12 days later, and then has just, casually gone down 50% since then. So it's a mover, and we're implying about an 11% move here on Circle. So I tend to believe that it will move 10, 12, 15% because you're going to get your first earnings here, and you're going to get, or is this second? Would this be the second earnings for Circle? Let me see. First. Okay. Yeah. Okay. That's what I was thinking. So with the first earnings, I'm assuming, folks, that we're either going to get wow, this is the real deal. It's delivering on the initial hype. Let's rip this thing back up to $300. Or this is a dud. It's way underperforming the hype, and we're going to knock this thing down. So I think we're going to get a big move. But what we can do with the two-way trade is we can trade a nice conservative style trade that requires less than that $17 move and still make 20, 30, maybe even a little more percent with just a move. And so for me, that's the kind of trade I like on something that I do expect to easily hit a big move. So what we do is we go here to the 15th of August. We go to the nearest expiration. This is a Monday, so that's still got 4 days of expiration. But we go to the nearest one, and then I'll start by looking for a move about half the expected move. So $18 the expected move. That means if we hit, we should go up to 181. I want to go about half of that to an $8 or $9 move, which would mean like 170. Okay, and you can see right here, the 167.50, 170 is about 98 cents. Now that's an expensive bid for a trade that's well out of the money, but it's because earnings is priced in here. It knows the expected move is $18. So a small move of $9 or $8 is a nothing burger. And actually, this is a little bit less. This is only $7. Well, then what I do, I don't stop there. I then go to the other side and I say, okay, what if it comes down now about $7, $8, $9? In that case, our sweet spot's gonna be right around this 155. That's about an $8 move, and we can look at that one. Now, what we want to do is we want to see, is there enough meat on the bone to take this trade? Because the most we can make on this is $2.50. So if this is $2.30, there's just not enough meat on the bone. You never want to take an earnings trade where you're maxed out at 10%. But if I can make 30, 40, 50% on a trade that has a high probability of moving that amount, that's an earnings trade that I'm interested in. So we're bouncing all around right now. I would say I want to get into this for about 185 or less. That to me is enough meat on the bone. So what would that actually look like? Well, you pull up our handy dandy calculator real quick. $2. You probably won't see my calculator because it's on my other window, but that's okay. $2 divided by 185. That's going to give us about a 35% ROI. Now, I don't know if anyone's taking this trade right now because the mid price is bouncing all around. I don't know if that's because of earnings or because of you guys, but I would put in a limit around 185. I really wouldn't pay more than that because the max value here is 250. So it's now the mid price is at 205. There's no way I'm paying 205, right? I'm not going to pay and give myself only 20% or 18% ROI potential. Let me go ahead, type this in the chat. I'll put my limit order in, but this is a classic case of I'm not going to chase it. I'm only going to pay what I'm happy to pay, which is about 185. So give me a second because we got lots of legs here. Buy to open, 167.50 call. Buy to open. I'm not going to put the expiration because I want to get this out there quickly. You guys should know closest expiration. Buy to open, 157.50. Put, sell to open. Remember, folks, always using a limit order, especially on earnings. Okay, we don't want to pay what the market's asking. Limit is 185 debit, and of course, this is on Circle, CRCL. All right, there you go. So that is now in the chat. I'm going to set, oh, there we go. We might even be able to get a little cheaper. Let me start a little bit cheaper for 180. See if I can get 10 contracts filled at 180. And then I'll just creep that price up a little bit more. Now, let's see what else we have for tomorrow. All right, let's look at today after the market cap. We've got 10 minutes. We've got ASTS. That's probably one that has a decent size expected move as well. ASTS. That's about 10%. Yeah, about 10%. The problem with these lower price stocks, the spreads are going to get a little too wide relative to percentage moves. We would have to trade maybe the 48 for that one. So let me just take a look at ASTS here real quick.
We have
go ahead.
Tomorrow morning on semiconductors, tickers ONON. I'm curious if they only have monthlies. Do they only have monthlies?
No, we've got weekly on it, but again, with the pricing of it, it might be a little hard to get a narrow enough spread for what I would love to do here.
Well, this one on the August. Well, I guess the closest one is the monthly expiration, right?
Oh, that's true. Yeah, because we've got 3 Fridays.
This one had an $804,000 put buy at 10 a.m. this morning. 45 strike puts.
Interesting. Okay, and then the Archer was puts or calls? I forget already.
Archer was calls.
Hey, let me just jump in here real quick, Nathan, because people might be trying to take this trade. What you typed in was 3 buys and 1 sell.
Oh, geez, Nate. Talking and typing. Sorry, guys. This is me trying to talk and type at the same time.
You can edit it.
There you go. All right. I'll edit it, which I did, and then I'll post it again. The good news is you would have never gotten filled at 185 for that, so hopefully that was my saving grace. There you go. Okay, let me also take a look at the Oklo here. It's also in that 10-11% expected move with a little higher price. So this one we might be able to get just a little extra capability on the spread itself. I was going to try to give you 2 different two-way trades. So because this one is expecting an $8 move, we want to look for something closer to a $4 move. In this case, 75, 76. And then to the downside, we'd be like at the 68, 69 range, and we'd update this to be a $69, and that one we could probably get in the high 70s, low 80s. If we can get that for 75 cents, that'd be about a 30% return. Let me go ahead and type this one, guys. Another one, be patient with. Like I said, I won't even waste time putting the expiration date in. If it's an earnings trade, it's always the closest expiration, always, always. So these are going to be the August 15th. I'll type in this Oklo one, guys. This is going to be another one. Be patient. Put a limit order in. If it gets filled, great. If not, don't worry about it. We're not going to chase and pay more on an earnings trade than we want to. $69 put, and then sell to open $68 put. And that, like I said, we can go, if we can get for 75 cents, then I'm interested because that's a 33% ROI. Okay. So for some reason, it won't let me do a line break at the top of this. I don't know why.
The Oklo one filled right away for me. And wow, yeah, the S&P is crumbling here in the last few minutes of the day.
Yeah, 0.3% are we've gotten sensitive to crumbling lately.
Well,
remember when crumbling was like 3.5%? Not that long ago. That was wild.
Yeah, probably pretty normal because we have CPI in the morning. Maybe some profit taking.
Could be some profit taking for sure. Interesting to see that my AMD trade was holding up so nicely all day for me, and now not so much. It was a warrior. It was a battler. But not so much anymore. Down 0.25%. Okay, so there's two different two-way trades. I'm going to try to get in for a couple here as well. Mid price going all over the place, but we'll see. I also didn't get filled on circle yet, so let me bump myself up a little bit. See if I can get filled. And then these ones, what I'll typically do here on these earnings plays is I won't really mess around and wait and put a target on until I see what the response is, because they're typically going to be a binary trade. And so I'll typically just wait for the actual earnings, see how they open up tomorrow, and then, make my decision. Am I going to try to get out early with a target, or am I just going to hold it for the max potential value? Graham, did you say you did get, you got Oklo at 75 cents?
81.
Oh, okay.
I didn't see what your limit was. I just went with whatever the market priced it at.
You paid a little juice then.
Yeah. I'm still gonna get 20-something% on that.
Yep. All right. Well, I'm gonna go up a couple more pennies on my circle. See if I can get filled on this one. Seems like some people got filled already. I did not, but we'll see what I can do on those. And then if you guys like that directional one on Archer, we could just do a fun little lotto play right here on a low price stock. What's the implied move? About $1. So you could take this one out, be super aggressive, basically go the full thing here. 950, 1050, and get about a 200% ROI. There you go. I'll type this one in here. This is a full gamble, guys. Just let's be super clear about this one. This is just a straight up lottery play. Has to move the full expected move in our favor. So don't take this one if you're looking for anything remotely high probability. We're going for about 200%.
That's the fun, though. We got to have some fun here.
Well, I always worry, an opening playbook that or closing playbook, that anything we type in the chat, people consider like a legit recommendation. So I always want to double and triple down that this is just a straight up lotto play on that one, just because we saw some calls coming in. Yeah. But hey, 200% if you hit it, sometimes worth a lotto play.
We're normally pretty methodical here. We like to take slow ball our trades, make sure we think it through. Sometimes on these earnings ones, you just gotta grip it and rip it. See what happens.
Yeah, that's what we're doing today. Of course, I can't get filled on anything, so I'm gonna have to get a little aggressive here and do a little chasing. I want to get some action. There we go. All right. Well, I got my lotto play in.
Is Oklo guaranteed? Nothing is guaranteed, Doug.
Yeah. These are, I mean, we're talking.
If they were
earnings.
guaranteed, I would be mortgaging my house and everything I have and throwing it in. And I'm not doing that. So, no.
Look at the mark over here showing 160.
Please guarantee it. If we were guaranteeing anything on the show, you should exit immediately and unsubscribe from all of our emails.
That's true. That's true. You should probably tell some governing body that we're guaranteeing profitable trades. Dude, this mark is saying that I should be getting filled, and I can't.
Oh, we have some Oklo puts here just now, 358.
Oklo puts?
Yeah.
Yeah. I honestly was thinking of playing straight up puts because I'm just, wondering if some of these overhyped guys that haven't had to release an earnings since their big runs might get sold off. But I like the idea of doing the 2-way because, they might have some incredible future pacing that they can promise in that call. And so I like the idea of having both sides.
Mm-hmm.
Oh, come on. Fill me. Give me some action here.
Let's see.
You eventually going to set targets on these, Nate?
Someone asked that earlier. Usually with earnings, I'll just hang out and see what they do and then come back and check just because it's more of a binary trade. If it's totally ripping, I won't even worry about it. And I'll just let it kind of go and try to get the max profit. And if it's somewhere in between, then I'll typically make a decision, try to get a partial profit or partial loss if it's, it's kind of in between the other direction. But I'll wait for that initial reaction so I kind of know where I stand and then make some decisions from there. Well, guys, I didn't get filled on anything. This is boring.
Mm-hmm. I got a lot of things.
I got 7 seconds.
No, well, there's your bell.
Nothing. Unbelievable.
Now you're down to doing shares. What do you got?
Well, that was underwhelming. We're gonna have to come back tomorrow and hit our GTI because that was boring. To not get filled on. Well, actually, now I guess we need Archer to hit so that I have something to write home about because that's the only one I got filled on was my straight up lotto play. Well, here's the good.
You didn't get Oklo? Oh, because I went a little bit higher on Oklo.
You did. You started higher. I crawled up and didn't get it. But here's the good news, folks. Here's the good news. The 2-way trade that I just attempted that I didn't get filled on either one, which is horrible. And now I'm going to be mad when Circle moves $80 today on earnings. Those are the fun, throw something at the win version of 2-way trades. If you want to see the real version of 2-way trades that has to do with that presentation where we can go for like 1.5% moves over 2 weeks and get a whole bunch of payouts, then we'll cover that here in a minute because that's the real deal. That's the 2-way trades that we've got. Let's see, where are we at?
And we've got much more methodical, well thought out, not an overnight half of a dice roll like this. And Nate, you're at 81% win rate.
81%, and that's without even counting Palantir because it's just floating 1 penny away from our target for the last 2 days. So we've got one that should hit here for another nice winner. And what you guys will see, I'm just looking through the track record right now, you'll see some really nice winners. 41%, 22%, 55%, 39%, 33%, 34%, 38%. Obviously, a couple losers in there too. One in the last 10 trades was a loser as well. But the key here is we're actually able to get enough meat on the bone, like I was talking about, for some really nice wins, 30+% wins, where if you look at kind of the historical way to do a straddle or strangle, you need the market to absolutely explode to even get to break even and then start getting some profitability. So the way that I kind of twist these for me are really, I think, the best way to kind of hack through those different problems. So we'll play that in a minute for you guys, just so you can see, because like I said, the dream is to be able to win in both directions at the same time, but it's easier said than done. We covered a lot of those reasons why just now in the training, but I think we've been able to kind of hack our way through it. And the cool thing about the 2-way options is they were absolutely killing it when the market was going crazy. If you guys remember March and April, Liberation Day, I mean, they were just like layup wins. But even as the market has tightened down because of the way that we're trading the options, we've been able to also win with some really small moves in the market. And so that's really, for me, one of the cool things to see with 2-way is that you actually are getting opportunities. And the data on 2-way options is from my live trading, which is going back, let's see, I guess a little over a year now, right? Yeah, July. So a little over a year of my live trading, but then we also ran 30 years of data just to see how the market has actually handled that, two directional trading for a much longer time frame. And the cool thing was that we were able to, kind of mirror those results from the last 30 years to what I've been seeing just with the live trading as well.
Let's see.
Joshua, it depends on the broker. So, like, if you put it all in one ticket, Thinkorswim will call it an iron condor, even though it's actually like technically a reverse iron condor, where you're looking for it to move, outside the box instead of stay inside the box. So technically, I would call it a reverse iron condor, or just double debit spreads. But it just depends on your broker and how they structure it. Yep. Yeah, a lot of brokers do. It just depends. Exactly. I noticed Fidelity will give you some weird warnings. So anyway, Graham, anything else before we move into what I would call the real deal two-way options?
No, nothing else top of mind. We've obviously got a lot still on deck this week, so it's just Monday. We've got an opening playbook tomorrow morning where I just finished putting together the content for the slides there. It'll be fun. I've got a new seasonal chart for us. You know me, I love pulling those. So that'll be fun to check out. And then again, closing playbook all week long. Now, we've got a lot of people saying we wish we started this at 3, had a full hour. Unfortunately, and Nate, this is just speaking for myself, I'm already so booked and slammed. I don't think I could book a full another hour here after the early morning.
Yeah, the idea of closing playbook, I know it would be great if we were able to dedicate the time and just do live trading all the time. But the idea was we wanted to squeeze an extra session and squeeze some live trading in, but just do it on a little bit shorter session where we get right into the chart. So unfortunately, if you guys want the deep in the weeds stuff, that's still going to be opening playbook every day. Closing playbook is going to be more, fast action, getting into the charts, live trading, short mini lessons like the one I gave today. Our schedules are insane with everything that we have going on. So apologize. Maybe over time, things will morph and there will be more time carved out. But for now, we committed to basically the max that we were able to commit to as far as time commit being live with you guys.
Awesome.
Well, we're all ready to jump to that true real deal two-way options whenever you are, Nate.
All right, cool. Yeah, well, someone just mentioned Archer's starting to get a move. Hopefully, we'll get a massive reversal on that because it's about 5% down already. But we'll look and see if Circle and those things move too. I don't think we've started seeing not really seeing anything there yet. So we'll keep an eye on them. But yeah, if you guys want to stay tuned to kind of see what really what we do in two-way options, which is not gamble on earnings. We actually have a very methodical approach with an 80+% win rate. Then stay tuned. We'll play that. And I hope to see you guys in there. We got our next opportunity coming tomorrow.
Awesome.